Hello, myself CMA Padmaja Buzruk. I will be discussing accounting fundamentals, financial accounting, paper 6, group 1, go to module 1. So, I'll discuss about accounting fundamentals. If you go to module 1.1, the heading is 4 frameworks of accounting. First, let me explain what is the meaning of framework of accounting. For the purpose of disclosing information in the financial statements, that is profit and loss account and balance sheet, some common rules and guidelines are used, and this is nothing but framework of accounting. जो आप प्रॉफिट एंड लॉस अकाउंट बैलेंस शीट बनाओगे, वाइल प्रिपेयरिंग दैट आपको कुछ रूल्स फॉलो करने हैं, कुछ गाइडलाइंस फॉलो करने हैं. दैट इज नथिंग बट फ्रेमवर्क ऑफ अकाउंटिंग. There are 4 frameworks of accounting: conceptual framework, legal framework, institutional framework, and regulatory framework. One by one, we'll see what are these 4 different frameworks. These are nothing but methods and assumptions that we follow while preparing accounting. Common rules, common guidelines जो होते हैं अकाउंटिंग करने में, that is nothing but your framework of accounting. First one is conceptual framework. What are concepts? Concept provide guidance in selecting transactions to be accounted for. All of you know all transactions are events, but all events are not transactions. Only monetary transactions are to be recorded in the books of accounts. So how these transactions are to be selected, recorded, recognized, how it is to be summarized, reported, that is nothing but conceptual framework. That is, this framework guides on preparation of financial statements. It guides on qualitative characteristics that the financial statement must possess, like materiality, full disclosure, etc. So, conceptual framework, financial statements are prepared using various concepts. These concepts are entity concept, going concern concept, accrual concept, etc. Why these financial statements are prepared? क्यों बनाते हैं? What are the objectives of preparing these financial statements? For providing information to various stakeholders. Stakeholders are interested people, parties जिनको कंपनी के फाइनेंशियल्स में इंटरेस्ट है. Those are stakeholders like debtors, creditors, money lenders, employees, government, competitors, tax authorities. These are stakeholders. They are interested in financial statements of the companies. Why financial statements are prepared? For providing required information to stakeholders. Conceptual framework is a body of interrelated objectives and fundamentals. Objectives identify goal and purpose of financial reporting. Conceptual framework, interrelated objectives and fundamentals. Objectives, why financial reporting is done, why financial statements are prepared, for providing information to stakeholders. And fundamentals or concepts that help to achieve the objectives. That is, fundamentals are nothing but concepts used, concepts followed for preparation of financial statements. So when financial statements are prepared using various concepts, it is conceptual framework. Next framework is legal framework. There are various statutes, that is law, under which businesses are formed. बहुत सारे लॉज है, हर एक बिजनेस हर एक अलग टाइप का होता है और उसके लॉज भी अलग होते हैं. Like partnership organizations are governed by Indian Partnership Act 1932 or LLP Act 2008. Companies are governed by joint stock companies are governed by Companies Act 2013. Insurance companies come under Insurance Companies Act 1938. Banks are regulated by Banking Regulation Act 1949. Cooperative societies are controlled by Cooperative Societies Act. Electricity companies are under Electricity Companies Act. So there are various laws, various statutes under which businesses are formed. All these statutes provide important guidelines on maintenance of books of accounts and treatment of specified transactions. They provide guidelines on forms and contents of financial statements. जो अभी हमने देखे हैं various statutes, various laws like Partnership Act, Cooperative Societies Act, Companies Act, Banking Regulation Act, etc. etc. सो वो जो लॉज है, जो एक्ट्स है, वो गाइडलाइन प्रोवाइड करते हैं फॉर मेंटेनेंस ऑफ बुक्स ऑफ अकाउंट्स, ट्रीटमेंट ऑफ स्पेसिफाइड आइटम्स. दे ऑल्सो प्रोवाइड गाइडलाइन कि आप फाइनेंशियल स्टेटमेंट कैसे बनाओ, प्रॉफिट एंड लॉस एंड बैलेंस शीट उसका फॉर्म कैसे हो, उसमें क्या क्या कंटेंट होने चाहिए. सो लीगल फ्रेमवर्क इज एज रिक्वायर्ड बाय लॉ, as per the guidelines given by statute or law under which the organization is established, formed. Next one is institutional framework. Institutional framework refers to guidelines issued by various institutes. So आप जब फाइनेंशियल स्टेटमेंट्स बनाओगे, अकाउंटिंग बनाओगे, दैट टाइम आप यूज़ करोगे गाइडलाइंस गिवन बाय इंस्टीट्यूट्स, वेरियस इंस्टीट्यूट्स, तो वो होगा इंस्टीट्यूशनल फ्रेमवर्क. इन इंडिया, इंस्टीट्यूट ऑफ चार्टर्ड अकाउंटेंट्स ऑफ इंडिया हैज़ डेवलप्ड स्टैंडर्ड्स इन द फील्ड ऑफ अकाउंटिंग. अकाउंटिंग स्टैंडर्ड्स जो रहते हैं वो इंश्योर कंपेरेबिलिटी, कंसिस्टेंसी इन अकाउंटिंग इंफॉर्मेशन. Indian Accounting Standard Board of ICAI develops quality accounting standard on different areas of accounting. ICAI का एक अकाउंटिंग स्टैंडर्ड बोर्ड है, वो अकाउंटिंग स्टैंडर्ड्स बनाते हैं, वो कंपनीज को फॉलो करने पड़ते हैं. There are two sets of accounting standards in India at present. Accounting standards as per Companies Accounting Standard Rules 2021 and IND AS under Companies Indian Accounting Standard Rules 2015. So companies को accounting standard नहीं तो IND AS applicable है. So these are given by institutes, Institute of Chartered Accountants of India. So it is institutional framework. While preparing financial statements, guidelines given by institutes to be followed. Institute of Cost Accountants of India, they have Cost Accounting Standard Board. And they have developed cost accounting standards for cost accounting and cost reporting. कुछ कंपनीज को cost accounting, cost records करना पड़ता है, वो कैसे करें? For that, guideline is given by Institute of Cost Accountants of India. They have Cost Accounting Standard Board and they have developed various cost accounting standards. And the last framework is, fourth framework is regulatory framework. Regulatory framework refers to guidelines issued by various regulators. So आपको जो financial statements बनाने पड़ेंगे, accounting करनी पड़ेगी as per guidelines issued by regulators. Now who are regulators? Regulator is a body that supervises and regulates particular industry. जैसे कि हर एक इंडस्ट्री का कोई हेड हो, कोई टॉप हो, वो जो सुपरवाइज करेगा इंडस्ट्री को, उसे आप रेगुलेटर बोल सकते हो. वो रेगुलेटर ने जो गाइडलाइन दिया है उसके हिसाब से आपको करना है. These regulators, they impose some rules, regulations while carrying out accounting, and that is to be done as per the guideline given by these regulators. There are different authorities in different segments of financial market such as RBI, Reserve Bank of India in money market. So in money market, who is regulator? RBI. In capital market, who is regulator? SEBI, Securities Exchange Board of India. In insurance sector, Insurance Regulatory and Development Authority of India is the regulator. Then in Pension Fund Regulatory and Development Authority is regulator. So हर एक इंडस्ट्री में जो रेगुलेटर है, those regulators they issue some guidelines, some regulations रहते हैं उनके. So financial statements, accounting जब बनेगी as per the guidelines issued by them as per regulatory framework. Corporate accounting in India is based on 4 frameworks of accounting. Corporate accounting, that is accounting in company form of organization, that is corporate accounting, to which Companies Act is applicable. So for them, these 4 frameworks of accounting is applicable. They help to streamline the accounting process. They help to improve the quality of reports generated. These frameworks contribute in overall development of accounting. जैसे कि आपके फाइनेंशियल स्टेटमेंट्स जो हो वो कंपेरेबल रहते हैं, यूनिफॉर्मिटी रहती है, अंडरस्टैंडिंग रहता है, अंडरस्टैंडेबिलिटी रहेगी. अकाउंटिंग प्रोसेस जो है वो स्ट्रीमलाइन होता है and quality of the report gets improved. So these are the 4 frameworks of accounting. Thank you.